All right, all right, all right. Hey, we are live on YouTube right now. We are checking out this stuff, and we're going to talk about the Inflation Reduction Act. Okay, so today we are talking about the Inflation Reduction Act, or as I like to call it, the climate bill, because it does absolutely zit to reduce inflation. Nah, okay. And I just want people to know this because I think we're getting a lot of wool pulled over our eyes. They're trying to do one of these. Woo, surprise. We actually didn't reduce inflation, but we sure did trick you guys into thinking that we did. so, um, look, this is my opinion, and I think my opinion is based on some really good facts and history, and based on what I'm reading in this bill. I mean, if you think about, let's just think about this. Let's just go right into the heart of this, okay? Where is the inflation really coming from? The majority of the inflation is coming from products that people use on an everyday basis, that we're really having trouble just buying: gas, food, groceries in general, household supplies, just everyday needs that you need for your business. Inflation is just getting out of control. And this bill really does not do that. But what we want to do is talk through some of the key components of it so you guys understand what's in there, what's not in there. And you can decide for yourself if you're really going to believe that this thing is going to actually reduce inflation. It does look like it's probably going to pass. They've been saying that they think um, the House Democrats tomorrow will probably pass the bill, and President Biden is expected to sign it into law. Even though it does absolutely zero to reduce inflation. I mean, it might reduce it slightly in a few areas, right? But it's not going to do the overwhelm. It's not going to give us all the help that we need as Americans in this country to reduce our inflation to a level that is going to be good enough so that people can get back to some sort of normalcy, and not be in such dire financial straits as so many people are, especially minorities and people from my community, etc. We're all kind of struggling, at all levels of society, and so that's what we're going to do today. We're going to talk through some of these key components. So I'm reading off my iPad here a little bit, so I'm going to veer off here to the left a little bit a few times to go through some stuff, and then we're going to talk about the most controversial part of this bill, which is the IRS stuff. Which, oh my gosh, don't even get me started on that. Anyways, all right. So here's the couple big tax raising things that came from this. And thankfully, there's a lot of stuff that they were going to put into this thing to raise taxes when it was originally called the Build Back Better bill, that is not actually making it into this bill. And so, from that standpoint, I am actually glad that some of this stuff didn't make it into it, and it's a lot smaller than what they were originally trying to do. But it's still going to impact people at all levels of our society, despite what they're out there selling, that no one below $400,000 of income will be impacted from this bill. It's bollocks, okay? And it's hogwash, it's crap. Whatever your term is going to be that you want to use, they're trying to pull the wool over your eyes, okay? You will absolutely be impacted by the provisions in this bill, okay? May not be directly, but it certainly will be indirectly, okay? So what we're doing here, there's two key things that's happening to corporations, okay? One, there's a new 15% minimum tax that they're trying to do that's going to impact probably about 200 or so big corporations. These are corporations with $1 billion of book income. I'm not going to get into book income versus tax income. I don't think most people care about that. But this is going to be something that's going to impact a lot of larger corporations like your Walmarts, your Amazons, your Apples, etc. The people who employ thousands and thousands of employees, okay? So what does that mean? All right, you're increasing the taxes on these companies. Guess what might happen? Either they're going to have to reduce workforce or maybe not hire as much, okay? Or they're going to have to increase prices. Oh, what does increasing prices do? Drives up inflation, counterproductive, and it also hurts people who are making under $400,000 a year, okay? Other things they might have to do is reduce dividends, or things that they're doing to encourage investment in their companies. And so when you do that, and that also impacts people's 401ks. If you don't know what your 401k is invested in, it is some of these large corporate companies that are going to be impacted by these bills. Okay. They are invested in that stuff. So it's going to hurt your returns on your 401ks. And it's going to hurt investors in general if you're doing some other stuff outside of your 401ks or your IRAs, etc., in terms of your investing strategies. And so it's going to happen. I'm just foreshadowing this and telling you right now. Okay. The second thing that's going to happen is they're creating this new tax. It's a 1% excise tax is what they're calling it on corporate buybacks or stock repurchases, whatever you want to call it. Okay. So there's been a lot of companies in the news for this. The airlines, probably most notably, because they needed a lot of help and a big bailout from the government. And I can understand and agree with, not using government dollars or taxpayer dollars to do corporate buybacks. I can understand that. But to tax them and penalize them for doing it when it's actually helping investors get a higher stock price, their stock price is increasing. That means their value of their retirement accounts are increasing, or their taxable investment accounts are increasing. It also, gives them ability to maybe do some more dividends type stuff, things of that nature. So we are ultimately hurting these corporations, which in turn is going to flow down to the underlying workers in these corporations and ultimately um, cause either inflation to go up, or you're going to see a lot of unemployment, or not as many jobs available, or out there on the marketplace for people to go out and do. Okay. So I don't see how this is really going to achieve what they're saying they want to achieve. Okay. So now, what are some of the things that they're spending money on? Okay. So one of the things is they're increasing some of the tax subsidies or tax credits that are available for people who buy health insurance on the marketplace. I shouldn't say increasing, but expanding and extending some of those provisions that came from the American Rescue Plan Act. And so, more people will be able to get a credit from their health insurance premiums that they're getting on the marketplace. That's one of the things they are doing to extend that for a few more years. And so that's one of the things they're getting paid for with this. They're also making a couple of changes to being able to negotiate prescription drug prices for seniors and things like that. That's a positive. I mean, making sure that seniors can pay for their medication and don't get raked over the coals with a bunch of medical bills and things of that nature. And they're also putting, I believe, a $2,000 cap on out-of-pocket costs now for Medicare health insurance costs. Which will ultimately cost the government more money, especially in cases where, some of them may get really sick. But, again, when you have a fixed income, lower income, I think it is important to kind of make sure people can pay for their medical bills. So, you could argue that that's a good component for this, especially if those people have been working their whole lives. They got, money coming from Social Security, etc. I'm okay with that. All right. And then a lot of the other stuff is related to green energy, tax credits, other BS like that. Not really a huge fan of, of these types of things. I mean, don't get me wrong. I understand that we need to try to be more conscientious of the environment and things of that nature. But the infrastructure in the network is just not there. And you're putting the cart before the horse, I feel like, in a lot of cases, trying to push people into buying electric vehicles when you don't have the infrastructure already in place. And so there's not a lot of charging stations that are around. The vehicles are not actually lasting that long in terms of trips. If you want to do a road trip, you'd have to sit around and wait, 30 minutes to an hour or whatever it takes to charge up a vehicle to where you can go another 300, 400 miles, however long it can go for. Places like Arizona and Texas, they're super hot. You're using more energy from your air conditioning and things like that. So your distance might even be impacted even more. So to me, there's a number of issues that are coming with that. Whereas with the gas propulsion vehicle, you're able to go to the gas station and fill up within 5 to 10 minutes and be back on the road if you want to. So I don't know. I can see why we're trying to go that direction. But I think we're putting the cart before the horse. And it is what it is. And not to mention, a lot of people that are lower income are going to have a really hard time trying to pay for these vehicles. Now, they are one of the things they're adding in here is they are adding a new tax credit for buying a used electric vehicle, up to $4,000 for buying a used electric vehicle when your AGI, adjusted gross income, is under $150,000, married, or 75,000 single. Okay, so they're adding that tax credit in there so you can go and buy a used electric vehicle, but who knows if you could find one for a comparable price that you would pay for a gas combustion engine type vehicle at this stage. I don't know. There are all kind of other cons to green energy type vehicles that get talked about sometimes, but not all the time. So I think we have to. I don't know. I don't want to get too much into that, but ultimately, I think we'll probably end up somewhere in the middle at the end of the day. But we'll see. We'll see. I don't know. But they're really trying to push this, and so you're going to also see increased tax credits for manufacturers that have already met their cap that was available before. So you're going to see some of that come out. You're going to see some energy credits or increased extensions, for the solar tax credits for putting solar on your house and things of that nature. So you're going to see some of that stuff come out as well. So yeah, you're going to have a lot of interesting stuff occurring over time and coming out over time in relation to some of this green energy stuff. There's a laundry list of green energy stuff for like commercial properties and everything like that. I'm not going to go into those details because it doesn't impact most of the smaller guys, which is primarily who I'm interested in educating and talking to. So yeah, we'll leave a lot of that other stuff alone. But if you're interested, definitely go take a look. Look if you're big on the climate change stuff and green energy. This bill is for you. Okay, this really is not an inflation reduction bill. This really is a climate energy type bill that is primarily focused on that. I don't care what they say; they're full of it. Okay, it's primarily on that. All right. One of the other things that's happening is the R&D credit for businesses where you can use payroll taxes to claim that credit and offset your payroll taxes. They're actually increasing the threshold on that to where you can get more of a credit from that for smaller businesses that are claiming the R&D credit. That's actually a very positive one. That's going to impact smaller businesses. That helps those guys out, especially when they're already running at pretty low margins or even at losses. So that kind of stuff definitely can help out those smaller businesses for sure. And so that one I think is another positive as well. But all that being said, overwhelming majority of this bill to me is just bad. And the marketing of it is just absolutely asinine. I can't even believe that how they're marketing this bill. It's crazy. We have groups like the AICPA that are saying that these new corporate taxes are going to be very detrimental to corporations and very difficult to comply with. And who even knows if the IRS is going to understand how to audit these things, because they don't know book income for the most part. They only know tax stuff. So it's a whole new ball game. I mean, we historically don't pay taxes based off of book income. We pay it based off of tax income. And so it's, you're muddying the waters with some of this stuff, but thankfully it's going to be limited to, some of the larger corporations who have the time and money to maybe, be able to comply with this. As much as I disagree with it, I mean, at the end of the day, they should be able to comply with it in the end. But yeah, you got a lot of people that are both sides of this equation that are for it and against it. The most heated topic, though, that we're going to get into is regarding the IRS stuff. All right. So this is the part that is probably irritating me the most, and I think irritating a lot of people the most in relation to this bill. They are essentially doubling the IRS workforce. Okay? I'm not even kidding you. They're doubling the IRS workforce. They're adding another 87,000 IRS agents. Okay? Now, I will say, generally speaking, if you're following the tax rules, you can get through an audit and not have significant issues. Also, if you're a W-2 employee, and you don't have a bunch of tax credits that you're claiming, like earned income credit or child tax credit, things of that nature, chances of you getting audited are pretty slim because they have systems that are matching up your income and making sure that you're reporting all that stuff correctly. And if you make a mistake there, it's just usually a quick change to your tax return, and it's not the end of the world. So that's usually fairly simple and easy to deal with. Okay, but you have the not so easy returns, like small businesses, real estate investors, those cryptocurrency people, those guys who I think are going to start to see an increase in their returns getting audited. And despite what they say, and despite what Janet Yellen, or whatever the heck her name is, said, the Treasury Secretary, despite what she said, I think yesterday or today, they will absolutely be auditing people under $400,000. There's no way you can keep 87,000 IRS agents busy just auditing people who make more than $400,000. I actually pulled up some stats the other day because I was doing a CPA huddle recording with my co-host Eric Pierre, and I'm going to pull those up here. Sorry I didn't have those ready, but the people who are making more than $250,000 a year is something only like 6% or something crazy like that of all the tax returns that are filed. Okay, so nope, I lied. 4.2% of all tax returns filed are from people who make. No. Gosh, let me get the right number here. 3.8% of all tax returns that are filed are from people who make more than $250,000 a year as of 2020 tax year. Okay. So the IRS data is always a couple years behind. So this is the freshest data that we have, is 2020. So 3.8% of all returns, okay, filed. And let me just tell you, people, if you don't know, there's 164 million tax returns filed every year. Okay, well, I shouldn't say every year, but for 2020 there was. For 2019, it was 160 million. Okay, but 164 million tax returns are filed in 2020. Of those, only 6 million are for people that make more than $250,000 a year. Okay, it should not take 87,000 auditors to look. Even if you looked at all those returns, it wouldn't take 87,000 auditors all year long to look at all those returns. If it does, there's something highly inefficient and wrong with our tax system. So they're, by their nature, going to have to look at people that are underneath that $400,000 mark. I mean, just think about it. Just use common sense here. And this is what I have an issue with a lot of our politicians. They are not using common sense in their approach to some of this stuff. By its nature, there's no way that you're going to spend all that money, hire all these people, and not look at people underneath $400,000 a year. Especially once you start looking at all those rich people's returns and going and defending them and not having any significant changes come from it. Because I guarantee you those guys have a team of lawyers and accountants who have probably been advising them, who have backup and documentation and understand the tax code, and will absolutely be making sure that their clients don't get any big deficiency letters. Okay. When you start to see that you're not making the money that you thought you were going to make from this, guess what's going to happen? We're going to the small fish. We're going to the people under $400,000 a year. I absolutely guarantee you this is going to happen. If anyone doesn't believe it, you're crazy. Okay. So last thing I'm going to mention about the IRS stuff, they are basically spending about $80 billion a year from this bill on the IRS. Okay. It's biggest increase in the IRS budget in years, decades even. Okay. It's broken down as follows. $3.2 billion is going to taxpayer services, $45.6 billion to enforcement, which is basically the people who are auditing, right? So the overwhelming majority is going to the audit side of things. $25.3 million to operational support, okay, the people that should be answering the phones and making sure people can understand what's going on with their taxes. And then $4.8 billion to the business systems modernization. See, to me, the operation support and the business systems modernization is flipped backwards. They need to invest a lot more into the systems, which will make things more easy for people to access and understand what's going on with their tax accounts. And if they do that, there's no need for people to call the IRS. If they can go in there and take care of stuff without calling the IRS, my gosh, you would have a lot less issues with taxpayers that taxpayers need to deal with if they just fix the systems and stop having them be so antiquated. Okay. And also, it would help if, for people who do have to call, the agents don't have to go to like 20 different places to find stuff if they could just look at someone's account and easily find what they need to find. So to me, there should be a lot more money spent on the actual business systems, and I would have probably been on board with this. But the fact that we're trying to add all these enforcement agents to go out and harass people and audit people, uh, to me, that's just wrong. And I think we're going to ultimately um, end up in a pattern where you're going to see a lot of people that are getting audited that are much below that $400,000 a year mark. And yeah, we'll see. We'll see. But anyways, that's mainly what I want to talk about today. So thanks for tuning in. Hopefully, if you have any comments or questions on the Inflation Reduction Act, feel free to leave one on the YouTube channel. Love to hear you guys' feedback. Most important thing that I want people to understand and know is, do not believe that this thing is going to significantly reduce inflation. There are a lot of other forces at play that are causing inflation that we need to take care of before we're going to see any significant change in that regard. Anyways, don't let them fool you. But let's go ahead and like, subscribe, and leave a comment on the YouTube channel. Always trying to build my subscribers. So hopefully you guys enjoyed the video, and we'll be back with more awesome topics for you in the near future. Have a good one. Bye.